All right. Hello, everyone. Thank you for joining me today on Mortgage Knowledge with Gwen. My name is Gwen Ranson. I'm your intentional agent. And so today I have the pleasure of speaking with Ms. Denise King, who is a senior loan officer with Crown Cornerstone Home Lending, correct?
Hey.
Hey, how are you doing?
I'm good. How are you?
I'm good. I'm wonderful.
Great.
And so give us a little information about where your office is, where you're located.
So I'm with Cornerstone Home Lending, and the corporate office is in the Galleria, but I actually work out of one of our branches, and it is on the Beltway at Clay Road. So it's pretty easy to get to. Just hop on the Beltway.
Okay. All righty. So we know that, I'm always looking to keep everybody updated and educated and informed with the things that's going on in the real estate market and things like that. This last couple of years, there have been some highs and some lows, some good, some bad. And but today we want to discuss some of the changes that are currently happening in the real estate market. And we see that there is some things that's going on with the seller's market. We're still, in a seller's market. We're still having some of the properties that are multiple offers going on with bidding wars and stuff like that. But we know that change does happen. And, sooner than later, probably change is going to happen when it comes down to seller's market switching over into a buyer's market. And the buyers being able to kind of get the property that they're looking for, the house that they're looking for, and things like that. But we also know, not just on the real estate side, this changes, the market mortgage side has some changes going on also that we're seeing. And so that's the reason why I wanted to speak with Denise today, so that we can get some of those updates that's going on. So Denise, I know that we have started kind of seeing where interest rates were for the last couple of years at historically low interest rates going on and things like that. And some people really actually took advantage of that. But now we're starting to see a change. Can you tell me a little bit about that?
Yeah, so what's happening right now are the rates have been going up. And they are actually projected to go up. So we haven't seen the top of the rates yet. Right now, we're in the low fives for pretty much any loan type, conventional, FHA, or VA. Now, granted, that's a generic just quote based on, there's a lot of factors that go into determining a specific rate, but they are, pretty much low fives, mid fives. And like I said, they're projected to go up. We could definitely see sixes by the end of the year. The Fed is still talking about raising rates. And even though it doesn't typically, follow, like the mortgage bonds don't follow the Fed rates, but it's having an effect on our rates as well right now. Yeah.
A lot of things, we see not just in real estate, but just in the world generally, a lot of things are going up in prices. We already had the gas price. We have food that has, went up, just our daily living has, increased recently in the past year or 2 years and stuff. And so we're seeing that increase, not just in the real estate, but also in life. And yes, so
absolutely
taking the advantage of the mortgage rates now is a big thing, because if you're thinking about purchasing a home, whether it's going to be now or in the future, I'm saying within this next year, you might want to go ahead on and take advantage of what we have going on now with the interest rates, because we never know, right?
Definitely. Now, granted, something could happen in the world and rates do go down, but more than likely they're going to continue to go up. Some people are talking that there's going to be a housing bubble. They're most likely not going to happen. This is pretty much a new normal, I believe, from everything that I'm hearing and reading. This is where we're going to be. So we just need to get used to it. And just, it's kind of our new normal. And it's time
Yes.
we will get used to it.
Yeah.
You know, house prices, it's a shock for everybody right now. But you know, our housing was very affordable for so long.
Mhm.
So that, you know, that's just something that is probably not going to change. So.
Right. And that's what I'm telling I have a lot of people who call me and say, okay, well, I'm just gonna wait until the house prices go back down. But I'm just letting them know that house prices will not go back down. I mean, like I said, with everything that's going up in price in our life, house prices are going to go up too, and they continue
Yes.
to go up. And so, if you're, like I said, if you're thinking about just buying now is the time. If you're thinking about buying within the next year, you need to get started now. And
Right.
so that's the reason why we're having this conversation.
Yeah, and I want to bring up a point that you had mentioned earlier is I mean, when we were looking at 3% interest rates, that was super, super low. We are still, I mean, if in the 5s, 6s, those are still considerably very good interest rates.
Okay.
We've spoiled for so long that again, this is kind of the new normal right now. But these are not high interest rates by all means. We can definitely see 12% interest rates, 18% interest rates, 9% interest rates. When I bought my first house, now granted that was early 90s, I did a down payment assistance loan, and part of the down payment assistance loan was not only assistance for the down payment, but it was a low rate. My rate was 7.41. So I don't remember what the rates were at that time, but that was a below market interest rate. So 5% is not terribly. It's more than we're used to seeing. So it's going to take a little while to get used to it.
Okay. And so since you brought up the down payment assistance programs, that was one of the things that I wanted to talk about, because I know earlier this week I read a Facebook post that had stated that the down payment assistance programs was gone. And I was like, oh my God, what? Wait a minute, what happened? So
we all had that same reaction that day.
And so I know we have, a lot of clients and stuff like that, of people who just look at, being able to utilize the down payment assistance program when they do get ready to buy. And so I really wanted to talk about that and how the changes are happening and what's going on in the area.
Right. So basically, the down payment assistance programs are state funded. And so what is happening right now, due to the increase of interest rates, they can't always offer all the assistance. So there was one day that the only down payment assistance that we had was conventional, less than 80% AMI, which is the income limit. So that was a shock for everybody. FHA was gone. The higher conventional income limits were gone. So with that being said, we don't know what's going to happen day to day with down payment assistance. Right. I mean, nobody really ever thought that it would totally be gone, but it was. Now, thankfully, only one day, and it did come back, but it's coming back slowly. So like the next day it came back, and we had only 3% assistance, whereas all these programs give you options for 3%, 4%, and 5% assistance. But right now, they're not offering 5% assistance anymore. So right now we have 3% and 4% back. So it slowly is coming back, but it is all based on the market conditions. And this is posted on each of the down payment assistance websites. There's 3 of them that are by the state of Texas. And so, my thing is, I would just say, always have a plan B, even though if you're out to use down payment assistance, and if it's there, great, we'll use it. But if you go under contract and it happens to be a time where maybe they're gone, then, you've got to have a backup plan. So just kind of keep that in the back of your mind. If something happened to the down payment assistance, would you be able to get the funding?
Okay. Yeah. And then with the down payment assistance program, there are things that you have to qualify for. There are conditions to be able to get the down payment assistance, correct?
That is correct. There's basically 3 main qualifications. One is going to be credit score. They'll go down to 620 credit score. The other one is going to be income limits, and different programs have different income limits, but they can be as high as $99,000. So that will definitely allow a lot of people to get the down payment assistance. And then I guess those are the two main ones. I was thinking debt ratio, but that's kind of gone away as far as that requirement. So it's credit score and income
The
limit.
amount, income limits. Okay.
Mhm.
And so the down payment assistance programs, I know there's a couple of them that we typically look at. And so can you give me some information on those?
Yeah, so they're all pretty much designed the same. So there's TSHAC, which is TSAHC.org. And then you can look at TDHCA. That's the second one. And those are the two most popular that people are doing right now. Then there is a third one. It's Seth, SETH. So you can kind of Google those and kind of get some information on them. But they're all pretty much designed where they have options for either grants, and that's money that you don't have to repay. So once you close, you've received that money. That's your money. You don't ever have to repay it. But what has become more popular is what we call forgivable second liens. And that's another option that they offer. And so what that means is once you stay in the house a certain period of time, then the money is forgiven. So for example, we have as low as a 3-year forgivable, and then it can go all the way up to a 10-year forgivable. So obviously a 3-year forgivable is much easier to swallow than a 10-year because you're getting to stay in that house, that certain period of time. So 3 years is pretty easy to stay in a house. Most people will. 10 years is a different story. So you just have to compare. And the main thing is to know what you're getting into. Don't think you're getting a grant when you're getting a second lien. Make sure you're knowledgeable as to what type of program, because that happened to me. I was getting a grant and I had to repay it. So do make sure you know what you're getting into, because that money does come out of the proceeds of your house. So when you sell, you have to pay that money back if you're not in that house that certain period of time. And then there is another one that is a true just repayable second lien, which means no matter if you keep the house 30 years, once that loan is paid off, whether it be sell, refinance, or you just paid off based on 30 years, then that money is due. So there's 3 types of second liens, or 3 types of down payment assistance. So make sure you do know which one you're getting involved in. One is not necessarily better than the other, because obviously the grant's going to have a little bit higher interest rate than the ones that you have to possibly repay. So depending on how long you think you're going to be in the house, or you may choose to refinance at some point, and you can do that as well. But like I said, if you do refinance within that time frame of your forgivableness, then you have to actually repay that money. So you just roll it into the new loan once you refinance. So you do have to wait to refinance until that time period is done.
Okay. And so with these down payment assistance programs and stuff like that, you want to make sure that you are working with a loan officer that knows the programs and stuff, and can be able to give you that information before you sign off on any paperwork, right? To educate you on the programs. Yeah,
absolutely. And not all lenders are signed up to do these. So make sure that you are working with a lender that offers them, because like I said, the lender actually has to sign up to be approved to do the program. So
okay, that's good information, because sometimes we just think that if we get a lender, they should be able to tell us about the down payment assistance programs and stuff like that. But so that's good information to know, to be able to ask that question when you start working with a lender. Are you able to do the down payment assistance programs and stuff like that? That's a good thing to know. Okay, so I know we talked about a lot today, and give you all of that information. But like I said, I'm always looking to be able to inform you, educate you, make sure that you have knowledge on what's going on and making the best decisions for your family when it comes down to purchasing a home, because we know purchasing a home is one of the biggest things that you're going to do, in life. And so we want to make sure that you're making the best decisions for you and your family. So Denise, tell people how they can get in touch with you.
So you can reach me via cell phone. My number is 832-689-3406. or my email is Denise, DENISE at homeloansbydenise.com.
All righty. And, if you have any real estate questions, you can always reach out to me, your intentional agent, Gwen Ransom, and my phone number is 346-702-6748. I'm always available. You can call me, text me, and if I don't have the information, I guarantee I get it for you. But we want to thank you all so much for just watching this. If you have any questions or comments or anything like that, make sure you reach out to either me or Denise, and we'll get you the information. And if you're in the process of thinking about purchasing a home or getting ready to get started, we would love to help you. So until next time, thank you all so much. See you later.
Thank you. Bye.